learning about what qualifies as living benefits, what are the advantages of living benefits, what are the types of living benefits that are out there. And I've learned a lot in putting this presentation together to really show our clients that you don't have to die to collect on a life insurance policy. It's sort of contradictory to what life insurance is all about. But when clients hear that, man, you know, I can collect on it and still be living, and your answer is yes. Clients love it, agents love it, insurance carriers like the added benefits. So with that, we'll get started into our slides here, and let's go to the next slide. All right. Here we go. So what are living benefits? To get started, a lot of people think living benefits is the name of the product. It actually isn't. It's really what more the product does. The actual name is an accelerated death benefit rider, and it's attached to a whole life, term, universal life, any type of policy. So it's a rider attached to an existing policy. And for most carriers, it covers terminal, critical, and chronic illness. So if a terminal, obviously, if there's a doctor certifies you're going to, you have a terminal illness, you're going to die imminently. Critical and chronic illness, we'll talk about in detail also. But it's really, again, contradictory to when you say life insurance. It's always, oh, I die, the money goes to my heirs, and that's it. Or charity or business or whatever beneficiary or purpose you have the life insurance policy for. But with the living benefit, you don't have to die to collect on it, and that's what really makes it stand out. I always like it's also a good way to overcome an objection, because I always hear a lot of objections when they say, well, this money is going to go to my kids, I don't want to leave them with too much money, or, my wife will just blow it, or my husband will just spend it on something. While they may not be valid objections, it's really good when we as agents can come back and say, hey, this policy is also for you. If you have some terminal, critical, chronic illness, it will help you during that period of time. So there's really a lot of benefits, and what really is a good benefit is there's usually no additional cost. So it's not like waiver of premium, for example, which adds a cost onto the policy. The accelerated death benefit does not cost anything additional on most times for the policy. Specifics vary by state and carrier. We deal with agents and carriers in many states. So I'm not going to get into a lot of the which state is this and which carrier provides that. I will give some examples from National Life Group, which is a carrier we work with quite a bit. And so I use a lot of their material because they have some excellent marketing material, some excellent definitions and how they work. So I used a lot of their information for this because, and they're in all 50 states. So it can get a little complex when you're talking about which state does benefits. So I'll try to give it some ranges. The accelerated death benefit, it's not a gimme. It's not a gimme if you using a golf analogy. It's something that is underwritten. I did come across, we did have an agent issue a policy last week, and the specifics, according to the client's height and weight, the National Life Group was not going to issue the living benefits to this client. So it is underwritten as part of the underwriting process. Usually, if the policies are rated, they're not going to, or they may not issue some of those accelerated death benefits. So it's not like everyone gets it or everyone doesn't. It's part of the underwriting process. So, and the clients are very specific, each of the client. This was a 250% of standard, and it said no death benefits, so, or no accelerated death benefit for this client. So it's not given to everybody. Can it happen to your clients? Here's a couple examples around heart attack, stroke, and cancer, for example. Heart attack, about every 40 seconds, someone has a myocardial infarction or a heart attack. That's a lot of people. So what we're saying here, if it can happen to your clients, it sure can happen to your clients, because you never know when they're going to have a heart attack. A stroke, again, about every 40 seconds, a stroke. I know someone recently who had one. Cancer, a new cancer is diagnosed every 18 seconds. That's incredible. And approximately 38% of men and women will be diagnosed with some type of cancer at some point in their lifetime. That's over a third. That's over 1 in 3, or closer to 2 in 5 people will have some type of cancer diagnosed, whether it be breast, lung, skin, so many different types of cancer that are out there. And it's just unfortunate that our clients have to go through all that, have to survive it, hopefully survive it. And unfortunately, after that, they could be uninsurable, depending on their own situation. So can it happen to your client? The real quick answer is yes, absolutely. Cancer can happen to your client. And unfortunately, there's a good chance that many of them will have that. And an accelerated death benefit is just really going to help your client get through those difficult times. Okay, I thought this was an interesting a slide that I found. It talks about the chances of bankruptcy from surviving different types of cancer. And what really, I don't know, kind of hit me, I guess, when I looked at the first one, it says lung cancer. Almost 50% within 5 years of having lung cancer will result in a bankruptcy. That's incredible. And when you look at even the other ones, they're right around that 40% mark after 5 years. That really goes to show what the chances or the impact of having cancer and having to your financial situation. So it's really something we want to look at our customers and just talk to them. And what are their plans? What is their savings maybe in the long term? Can they afford the extra cost? Because their expenses are going to go up, their income could go down. And it's really a great graphic to show even what happens in the first year, second year, the chances of having this financial impact on a family. So it's incredible. And you can see all the different types of cancer there, even melanoma, which is just right over that 40% line. Okay. And this is a very telling slide, and I really like this because this is what happens when you have a terminal illness. If you're on the left-hand side, your income, you're going along fine, your income, your expenses, and then you have a terminal, critical, chronic illness. You have some illness that hits you, and it's going to hit your wallet too, unfortunately. So what's going to happen here is your income's going to go down. Either you can't work at all, or your hours are cut, or maybe you can just work 1 day a week, 2 days a week, wherever the case may be. Your income's going to go down, and as we all know, even with insurance, your expenses have a tendency to go up. Whether it's AIDS, you need someone to help you out, whether it's medical, whether it's travel expenses. A lot of expenses are not covered by insurance. So we have to look at what happens. And if your expenses go up, your income comes down, you're incurring additional debts. So what we like to show our clients is that with the accelerated death benefits, the living benefit that you have, when that illness hits your family, your income will go up because you're going to bring in this money from the terminal illness or the chronic illness or from the critical illness. You're going to bring that money into your household, and that can offset those expenses that you have. It says here at the bottom, helping to fill the gaps in health insurance policy that doesn't cover especially non-medical expenses such as mortgage, car, food, et cetera, things like that. So even though some of your health benefits may be covered by health insurance, there's a lot of things that you really need to just carry on your day-to-day living. So we'll talk about a couple things around terminal illness. Diagnosed usually within 24 months. There are a couple states, I did look it up, Connecticut, Pennsylvania, there was a couple others out there that had 12 months. So it's basically it's 24 months you're diagnosed that you'll have to live. Certification by a physician. Obviously, they're not, I guess, not going to take our word for it, our client's word for it, but so it has to be certified by a physician, and it's paid out as a lump sum. And we'll talk about how it's accelerated here in a minute. So what's basically going to happen is you have the terminal illness, you're going to report it to the insurance company, and you're going to work it out with the insurance company to get a lump sum payout. And you're going to take that bucket or that money, and you're going to put it towards your expenses or whatever you want to do with it. There's a variety. We'll talk about things that you can do with it. And it's paid as a discount to the face value. So if you have a $100,000 policy, you're not going to get $100,000 to settle the terminal illness of it. You would get some portion of that. On the chronic illness, a little bit more complicated, but it's unable to perform 2 of the 6 ADLs, activities of daily living: bathing, continence, dressing, eating, toileting, and transferring. And it's usually for a set period of time, usually about 90 days. So if you can't perform 2 of the 6, you can apply for the the chronic illness benefit. Again, these are paid directly to the policyholder. You don't have to be in a facility like a nursing home or anything of that sort. And the policy must be enforced for a certain length of time. In National Life example, it's 2 years. So what we're finding a lot, especially with all the updated medical care and medicines and things like that, people are living longer. And if they have a chronic illness, they could be living with that chronic illness longer. So the benefit to the client is that they're going to get this pool of money, and they can use it while they have this chronic illness. So it's something that we really want to look at our clients and say, here's a benefit that you could have for a long period of time, and that we want to help you offset any of those costs. And then lastly, critical illness. This, again, it pays a lump sum benefit, whereas a chronic illness usually pays an annual benefit. But critical illness, like terminal, will pay a lump sum benefit. Cancer, heart attack, stroke, ALS, blindness, kidney failure, major organ transplant. I even found a couple more: blindness, cystic fibrosis, renal failure, stroke. A lot of some additional. I guess I got stroke up there, but there's more to the list of what falls under these critical illness. Again, these are policies paid in a lump sum to the policyholder. Does not include self-inflicted injury or attempted suicide. Policy must be enforced for a predetermined length of time. And I found this statistic interesting, is that critical illness is the #1 cause of mortgage foreclosures and 60% of bankruptcies. So you can see these are illnesses that affect us. Unfortunately, they can affect us for long periods of time. And I know someone who had ALS, and she was young, and she suffered for many years, and it was just not easy to watch her go through all the stages of Lou Gehrig's disease. And she was in her early 30s until she passed. But having some pool of money to offset the cost, to live your life as normal as possible, help your family financially, is just a great benefit. And if you can hold off on mortgage foreclosure, hold off on bankruptcy, that's just a great way to help your family. Okay. Some examples on full acceleration and partial acceleration. For example, in the terminal illness, if you do a full acceleration of the benefit, let's say, and I took this from National Life Group, they have a really good display on how this works. So give credit where credit is due. Death benefit of $500,000. If you come, you say you got a terminal illness, brain cancer or something like that, and the doctor is going to certify that you have within usually 2 years that you're going to pass. They will say, okay, for 80% of your policy, $400,000, they'll pay the $400,000 and the policy terminates. So the client has that $400,000 to do whatever they like, and that's it. And the policy is done with. The other example, more on the critical illness, is the partial acceleration, where if, let's say you have the same policy for $500,000. If you want to accelerate, let's say half the policy. So again, you go back to the benefit before discounting of $400,000, and you're going to get 50% of the acceleration. So you're going to get half of the $400,000. You're going to get a one-time payment of $200,000. You can take that $200,000 while you're alive to do anything you like. This could, again, pay the mortgage, income, could be a variety of things we'll talk about in a second. But your policy is also reduced by 50%. So that $500,000 policy now becomes a $250,000 death benefit. So what's going to happen is when the insured dies, there's going to be a check for $250,000. So what did you get? You got $200,000 up front, $250,000 death benefit is $450,000. So this is a case of a good case of a win-win for the insurance company. They knew they were going to pay a claim. They paid $50,000 less, and and for the client, they got their money. They got $200,000 to use while they're living, which is a great benefit for them. And then there's also a $250,000 death benefit that's going to go to surviving spouse, children, whomever. So these are really two examples of win-wins. The carriers don't mind; they're paying a little bit less, but it's more as a client-centric event. The client's getting that money up front to do what they please, and if they want to do the partial acceleration, for example, they're also leaving some money for their beneficiaries. Okay, and then this list could be really, really long, but what are some examples that people can do with their accelerated death benefit? Regular household expenses, just living day to day. I need extra money. Here's some extra money. Home modifications. Let's say I'm in a wheelchair. I need to put some ramps in the house, or I need to redo my shower or bathtubs, things like that. You have to look at what are we going to need to make the home, just livable for the next couple of years, or as long as possible. A lot of people look into experimental medicine or traveling to other places where some experimental drug could be approved, and they want to travel there. Nursing home care, adult daycare, reimbursed for lost income. If I can't work anymore, I need to get some money. Maybe I do or do not have a disability policy. Getting Social Security disability usually takes a couple of months to get. So we want to provide that income to the family as soon as possible, or the carrier does. Quality of life expenses, dream vacation. I know some people who just say, look, I haven't been away with my husband or wife. Now's the time. We want to do it while we're still alive, and we just want to take I would say a cruise, but maybe not so many people are taking cruises these days. And lastly, preparation for final expenses. That's unfortunate, but that's the way it is. Someone who, if you know you're going to pass away, maybe you want to take care of that now, so the surviving spouse doesn't have to worry about it when the time comes. And lastly, we're seeing, sort of on a separate topic, but we see living benefits as a great way for our agents to increase their production. It makes the product more sellable, again, overcoming a lot of objections. And by telling a client, hey, this is what you can do with the benefits, And these are living benefits, not death benefits. These are living benefits. It really lets the client know that we're here to help them. We're here to show them that life insurance is not just for those that are dying. Life insurance can be here for the living. And it's just a terrific way to help our clients and maybe give them something they didn't even know about. They may not even know about living benefits and how that helps them. And so this is a real advantage for our clients and a real advantage for our agents who take advantage of policies. And we find most of our agents see an increase in their production when they talk about living benefits. And a lot of the material we have from National Life Group or some of the other carriers, they also offer these types of benefits. And we want to give it to we want to make sure the clients have it. And then lastly, this is like I said, this is our third session, but we're going to have future sessions. In 2 weeks on the 29th, we'll have another session. If you have ideas, feel free to email me. If you have any topics you'd like to cover, but we're going to talk more about life insurance products, different types of products, quotes, and the application process. A lot of people have asked about COVID-19 and how that impacts life insurance. A lot of things have changed about what carriers are doing and how they're doing medical exams or not doing medical exams. That's a really interesting topic. Field underwriting is always, how we talk to clients and how do we recommend what the preferred standard, things like that, to the carrier. And then marketing concepts, talk about mortgage, final expense.
Tired and sluggish?
Okay. With that, does anybody have any questions?
Your body.
Any questions that you have before we wrap up for this afternoon? Let's see if there's any questions on the Q&A. All right. No. Okay. Sorry.
I've got one, Art.
All right, Tom. Sure. Go ahead.
When it on a partial, that 250 that's left, they have to. They're paying now the premium on that 250.
I believe so. Yes. Because it's basically a new it's a new policy. It's not a new policy, but it's a new death benefit amount.
So if it's a term contract, do they extend it benefits? Because usually it depends on the length of time you have that term contract, and if it's extend, that jumps up. So is this something that is restructured at that time so that they don't have to fall in and start paying the higher premiums at a later date?
That's a good question. I'm going to confirm that with National Life Group because I was looking for that answer. I thought about that too in the material I have from them. Here, I'll hold it up here. They have a long thing. I was looking for the answer to that because I had that question myself, and I believe when I was on a call with them recently, they talked about that, but I will confirm that and I will send that out when I send out the deck. Okay, Tom? Okay, appreciate it. Yeah, but because they're not going to charge you a premium for coverage you're not going to receive. Not to charge you a premium for $500,000 when you're only going to get $250,000. Well, I understand that. It's just whatever is left. How is that going to be structured, especially if it's an IUL or a whole life or whatever, that's understandable. But if it's a term contract, how is that going to be structured now? Okay. Okay. I'll put that answer out when I send you the deck, and I'll send out information probably tomorrow sometime. Okay. Okay. Anybody else? Any questions? Let me go here, see if there's any Q&A. No? Okay. All right. Well, if you if you're on the call, if you don't have the appointment with us, I know Tom, for example, is going through the appointment process. It does take a little bit, but it's he's going through it fairly quickly. So feel free to call me if you have any questions about going through that. I will send out the deck and the recording probably tomorrow, and I'll also answer Tom's question about restructuring the term once the accelerated death benefit is paid. And I thank you for joining, and have a great day, and look forward to seeing everyone in 2 weeks when we do our session on the 29th, and I have a couple ideas. But if you have anything specific you'd like to hear, shoot me an email, give me a call, and love to hear from you on ideas that you'd like to hear around future training sessions that we have every other Monday. Okay, so with that, thanks for joining, and we'll talk to you all later.
Thanks a lot. Have a great day, Art.
Okay.
Thank you.
Thanks, everyone.